Yeah. So Mike, you want to do a debrief? So Henry, maybe let me just share his last remarks. Okay. He thinks that in terms of the specific fees that we are planning to charge, he thinks that's all flexible because it's really a market acceptance issue. But we don't know until we test the market. And he thinks maybe with a smaller target size, 10 million, for example, he thinks that's easily doable in terms of, existing properties he already knows, because he has done quite a few of the buy, sell, rent processes. Well, over the years, they have done already over 100. Okay. So that is, something they, very experienced with. It's just that there hasn't been any ICO as a mechanism. Okay, so potentially with ICO, it can scale up, or more, I guess more things can happen. Yeah, so that was just his final remark, and he thinks that there is also a low risk way to test the market this way, that he can potentially provide the properties, to be tokenized, and we can offer the platform. And even if the platforms don't raise the expected fee, he can just always default to go back to traditional ways, to do things. So yeah, so yeah, I guess that's that. Yeah. So I think what you want to say from Mai is the only pending issue is what's the acceptable legalities. The questions you ask, for example, like the ownership of the property, of the tokenized property. Should it be in a special purpose vehicle, like set up a company and all that thing? What would be properly acceptable under Taiwanese jurisdiction? Figure that out and just execute it. And that's the best way to learn. So, all right. So, yeah. You're muted, I think. You're muted.
Yeah, of course. Sorry, I had to take a call from my wife.
Oh, okay. All right.
So, yes. Okay. So first thing, you've talked about having Henry on board as the part of the team.
Right.
There's a lovely logic in doing that.
Okay.
The challenge that we have with doing that is if Henry is providing any of the properties, or Henry is managing any of the properties, there's a conflict of interest.
Oh, okay.
So that I'm okay with, doesn't bother me. But you might find that other people are. That's just something to consider before we make any offers.
Okay.
So I think
he's already a property manager, but he also provides the property as in the.
He's going to provide the property. He's going to get the funding. He's going to get the profit from the property, from the management of it. It's all him. He's the principal beneficiary, and he's providing all of the assets, and he's financially gaining off of the token rate. At the fact that he's then actually a part of the entity that organizes it, it's his benefit. It's all
it
for
also
him.
makes sense, right? It also makes sense for him to have a stake. Is that also part of the or maybe not necessarily?
No, I'm not. I mean, for me, no, I don't think that. I mean, I think I think that his knowledge puts him in the position to be a part of it. Certainly, within the Taiwanese context, right, without doubt, and gives credibility and all the rest of it.
Right.
However, if I was an outsider looking in and I looked at the structure and I went, "Well, wait a minute, this guy's the principal beneficiary. That's all he gets." It becomes a conflict of interest that you have to be aware of, or at least ask the question, right? Because it would be different if Henry was actually the was an advisor, and he was maybe getting some kind of, he was an advisor, and he was selling some of his properties and releasing cash through tokenization, but it wasn't his management company. You'd have a different, there would be a different thing then.
Okay, right.
And even then, people might sit there. It depends. It depends what people are used to in terms of what they want to think about and how much research they actually do. Because another thing that we've learned through ICOs and is the benefit or the strength and the power of the community. So if you have a Discord channel or whatever the channel is that we allow the community to be managed by, then what do they say? And if you sit there and you only have, you've got one person who's sitting there going, then it's only going to, cause issues, right?
Right. Yes, to that, I agree with you that we want to design a good structure, a strong foundation, right, in terms of what the platform will look like, will operate.
Yeah. So I think, I genuinely think it is impressive what he knows. Of course, he's got a lot of experience, and we can, really leverage that. So that would be a logical reason to have him on board, particularly for the Taiwan kind of project. I don't necessarily think he's going to be. He will be beneficial to ask good questions in any other project. Let's say if we were doing one in Europe or America, for sure. But I just have to sit there and raise. It'd be like if TAP were doing something for any of the properties that we were doing, right? Then you'd say there's another conflict of interest. But then where you've got to start somewhere. So I think there's another argument there that says, well, it's got, he's somebody who's willing to take a risk with it. Okay.
Right. It has to start somewhere.
Yeah, exactly. So that's why. And for the proof, we brought him on because he could bring about properties which would allow us to do proof of concept. Now we're, and I think then you would sit there and, okay. So maybe I'm just arguing this out in my own head.
Let me feedback on this part. Okay. So just from your comment, and let's say we're aiming TAP for become a global platform, then I think it's probably suitable for Henry to be our advisor, okay, but probably not part of the management team. Okay, I am saying this with a certain intentionality that because as an advisor, he can definitely provide this expertise, experience, also asking the right questions. But I think maybe the management decisions has to be clear from potential conflict of interest, right? Because he will also be the client of the platform. And, basically, I guess management does have a responsibility to balance between the interests of different stakeholders, right? Including the clients and the investors of the platform, right? Obviously, we will be doing fundraise. And it's not to say that there's necessarily going to be conflict, but I think basically, if conflict of interest exists, I think by all means we should try to reduce that, right? Just to make sure that the platform has a good structure in that sense. Yeah. So
that makes sense.
And besides, I have another point is if we are thinking about to make this international, operating in more than one global markets, it also makes sense for the local experts to be just advisors, right? And while keeping the management more or less independent, not tied into any particular geographic markets, right? So I think this is just by design. Okay, just by the power design. Okay. So
makes sense.
That's that. Okay. So I think we'll invite Henry as an advisor. Okay, and allocate.
Yeah, whatever. I don't want to. Okay, so it's going to say if it was me, I'd say, all right, what am I getting as an advisor?
Well, yeah. So this goes back to the. I think I still like to go back to the impact design. Okay. And maybe we should. Are you okay to discuss?
No, I don't want to do that now. No,
okay,
I think it's more important. I don't.
Good enough for today's discussion.
No, just to say, I agree in principle that Henry's ideal for an advisor.
Okay.
So that's fine. What does
Okay,
that
sure.
actually mean? We need to figure that out.
Right, right.
And my whole point about impact design and the percentages is
Right.
we've now gone from in the period of this conversation, his recommendation at the end was to go for 10 million as being the aim.
As the initial
yeah,
goal,
and that's
right,
and
initial
and that's
milestone.
10 times less than what we said, right? Which and again, so that's why I think it was really that was worth a lot to me, because now we can start basing stuff on real numbers. So if he's saying that 10 million is a real number,
right,
that you can achieve over, I don't know, a 12 to 15 or 12 to 18 month period, for argument's sake, then that's great.
Okay.
What do we need to do within that? So our platform needs to be structured towards that. And then what does that 10 million mean? I mean,
okay. So he already, that means spell out. He already has a property listed for, with details provided for us. That's a 2.5 million project. So it's probably just 4 of those. Yeah.
Okay, 4 or 5 of those. Right.
Right. 4 or 5 of those.
So, that's great, right? So, we've still got to build TAP. So that's going to cost money. So that's an initial ICO raise, which Ian wants 10% of, right? Then there's raising. So let's call that $1 million or $1.5 million. Okay. Then there's raising a further 10 million to fund the projects. So Ian's going to want 10% of that. Right?
No. Well. Oh, okay. All right. If you're talking about we're doing the full raise to support initial ICOs, then yes. Yeah. Ian will have a 10% of our first ICO, right?
Right. Yeah. Okay. So let's call that 1.5, right?
Right.
Because that's to build TAP, right? Then we can say, right. So now then we're going to do. Then our intention is to keep doing ICO raises indefinitely, based upon different projects that come into TAP.
Right. Exactly. Yes.
Now, with that, Ian can have a choice of whether or not he wants to have that 2% as a founder kind of share, and then he'll give us all of his access to everything that he does. And in which case, that's 2% of the founder, right? Which I think that's going to be different than paying him a fee.
Right, exactly.
And if we get that, if we get that, he's going to get 2% of a global marketplace as opposed to taking 10% of the platform's fees, right? So if we get that, then that's much better. But then we have to understand he's not going to make that decision unless he can actually see, well, 2% of what? 2% of nothing is nothing, right? But 2% of 50 trillion, okay, I can take 2% of that,
right?
But if we're saying that, okay, our estimate is that in the first 18 months we will need to raise, we aim to raise 10 million in ICO for 4 to 5 projects of 2 to 2.5 million each. If that's the case, what is our fee structure going to be for those 2 to 2.5 million? And therefore, how much profit is TAP going to make in the first 18 months? Because that's going to influence on how many people are going to, who wants to sign up for the first 1.5 funding round. Then we can sit there and go, well, it's going to cost us this much to operate, this much to build, this much to operate. We're now going to generate the 10 million. So out of that, we're going to get this much fee. That's our profit. So people have an understanding of where we're making money. And then that's almost like a proof of concept. And then we can start rolling it out globally. And then we can start, once we do that, we can start becoming accredited in all the different regions. So that, when you look at it in that context, then if it takes $50,000 to become compliant within the SEC in America, or it costs £50,000 to become compliant with the FCA in the UK.
Okay.
Those numbers are pretty inconsequential numbers. If we've generated 1.5 million in the first funding round that we earmark, all right, we're going to put 150,000, 200,000 into legal requirements to become, compliant within these different areas, right? So then we've got a plan to globalize and do so legally. And then the other thing then that we might want to sit there and go, well, all right, actually what we'll need to do at some point is have it on our milestones that will migrate the whole entity to Dubai, because then it's a zero interest, it's a zero, tax perspective, right? And then also we can benefit from their that's a global center, and it's So we're protected by their
investors
legislation
as well. Yeah.
So there's a bunch of different. I think this is where we're kind of having to balance, right? A visionary element to it, which is what you're good at, and a more pragmatic element, which is, I suppose, is what I'm bringing to the table at present. But if we've got this mapped out, right, and we've got a plan for this, then it's going to be a lot easier to sell it, because people can see both the vision and the balance of operational nature of it.
That's the
and they can
most
see that
ideal combination.
And they're investing into something which is that they can see has thought about the issues and is bringing value to it. I think the specifics then about what I'm very wary of Henry from a perspective of he's only going to talk about it from his point of view. Which is fine, and you'd expect that, but then that means that there is a bias. And if our responsibility, as you said, is from a management perspective, that we have to look at it from the point of view of protecting all the stakeholders, then I just think that that's the thing I think is
from my perspective, in my interaction with Henry so far, although he and I were classmates, we weren't really like buddy back then, and actually it's been a couple of decades since we probably conversed in any length. Okay, so I treat him as a business partner, okay, and a well-respected, very knowledgeable business partner in that sense, because obviously I think his company is doing quite well, and they're planning for an IPO this year. And basically, my personal observation and think that I think he's very practical. Okay, he's very practical and also conservative. He makes safe money. Okay. Which is why I think he's already 200 plus people. Whereas I'm still 2%. I think, that tells the difference. But but obviously I think there are different strengths, right? Which is why we're now collaborating. And I think something wonderful could come out. I trust in his integrity, okay, because I think at various points he does bring the issue of integrity into this. And I think he's also, but like you, I think you also struck me as keenly aware of some of the finer points of of the interests, right? Like conflict of interest, things like that, different interests. I think he's also quite he grabs that very well, meaning better than I. So that my take of him is quite pragmatic, and also, he doesn't do risky things. It also helps, like, okay, he's in a, real estate industry. And also he has government as his client because they are social housing partners of the government. Yeah, so I think that also tells you about, his approach to business, right? So
one of the guys in my pod groups,
right.
he's doing something along. He's in the States, and he does a lot of stuff with Hub, in terms of funding and helping people do stuff. So it might be really interesting once we've got this off the ground to I'll engage with him on that as well.
Okay.
But anyway, that's a future thing. All right.
So next, yeah.
I think I wrote up some stuff on there, right, that I didn't actually look at. But I still got to say, what's the benefit to the investor? I mean, I know he said it from his point of view. Well, okay, so small investors can get into property. That's fine. Yeah, we know that.
Right.
It's liquid. Yeah, we know that. We've already established that. But if we're asking for people to invest up to 10 million in business, 2 million into a project, like project number one, right, or 10 million into 5 projects, right?
Right.
And we do a capital raise that allows us to then go out there and find 5 projects or 4 projects.
Right.
Then what are they going to get? And
Okay.
I don't think a possible capital gain of 6 to 10 or 7 to 10% is necessarily enough, especially if you're sitting there saying, well, we're going to take, let's say we take 5% of all property owned, right? So theoretically, that straight off the bat, then TAC will take 5% of the 10 million, right?
Right. Which is 500K, yeah. Right.
So straight away we've earned that.
Yeah, half a million, yeah.
Yeah, straight away we've earned that. Now what's going to happen? We put it together, we put them on the platform, we tokenize it, then they're going to get they're going to get liquid tokens of property. They're going to liquidize the token. Is that enough? Is that enough to be attractive to them? And I'm not sure that it is.
Okay.
But again, I don't know. Maybe it is. Maybe it is. I would sit there and I'd think, well, surely if I invest.
The tokens, well, for one thing, the tokens will be collateralized by, very solid projects, provided that it's also, real properties and with real management. And Henry's current estimate is an average return of 25% per year for 10 years.
That's because he's doing this combination. Now, this is where the key thing is really, I mean, it's really important that, how you, on the Flourish thing, right? You got your nice kind of brochure sorted out, and you've got this kind of, the plans and all the rest of it. And this is where that level of detail has to be put together really, really well. And that's where, fine, if Henry and his whole team are already doing that sort of thing, and they can just chunk it all together, and we can then dress it.
They have the numbers.
So that
they have the numbers. Yeah, they have the numbers.
We can dress it with the wording, with the team, so that basically it becomes an investment proposal that we can then tokenize out. Then people can sit there and read the investment proposal. Go,
yeah, it is. It is.
So I can
from my understanding. Yeah, that's it.
Yeah.
That's it. Yeah.
And then we put the project, the projected numbers. But everything's
to the
a risk.
site, to the platform,
So this is the management team, this is the property, all of it. Then I suppose we're just, I guess, and we're getting 5% of the token value. Right. So although that's got an initial value of $500,000, if he goes up by, if we keep those tokens for another a year and a half to 2 years, and it's increased by or 10 years, and
it would increase. The expected average is 25%, right, per year. Over a 10-year period, he estimated it's 250% because it's 5% per the rental ROI is 5% per year. Okay, so 10 years, that's
so here's the thing, Shin, and this is sorry to interrupt, right? But this is the thing that's really important to me is if we start up a business and the 100% of that business owns 100% of property number one, right? And it owns 100% of its actual value, call it 2.5 million.
Right.
Actually, it generates. I can't do the maths, but I'm going to make a number up: $50,000 a year.
Mm-hmm. Right. Mm-hmm.
I don't know if that's true or is it 150? I don't know. But anyway, does he have that number?
Okay, yes, he does. Actually, he already has a basically average number, which is okay. So the rental expected ROI is 5% per year. Okay, that's from the rental income, 5% per year. The
5% of what?
5% of the investment amount. Okay, so for example,
So 5% of 2.5 million.
yes, 5% of 2.5 million. Yes, correct. Yeah. So
Okay,
he's
what's
raising.
that as a number?
Yeah. Well, okay. You can do the calculation. Yeah. Okay.
125.
200. Yeah, 2.5 million. Okay.
Yeah,
So
125.
yeah. Okay.
I'm right, am I?
Yeah.
Times
So
0.025.
mhm,
No,
right.
62,500. Is it?
No, it's I think
5%, you said.
yeah, 5%.
Yeah, 125.
Yeah, 125. Yeah. Okay.
Okay,
Mhm.
fine. So of that, what's Henry getting of that 125?
No, that is the profit, meaning that it's the rental deducted all the after deducting Henry's fee, management, all that. That's the profit for the investor. Yeah.
That was a crucial point that was missed out up until this moment, right?
Okay.
Because then we've got a company that has invested 100% of its money into 100% of the asset, and it's tokenized, right? So any capital increase in that property, that project, will be owned by the entity. But you're also saying that there's an annual dividend of 5%, which in this example is 125%. Now that's not rental, that's profit, a rental profit. So if you're then saying, so that 125 as rental profit, how do we distribute that between the token holders? Do we generate more tokens, or do we increase the token value?
Right. So I mean, either way is doable.
And here's the thing.
Current.
Sorry, I'm thinking here. Forgive me. I think we should have them separate. I think we should have an asset token, because a token for an asset is tangible,
right? Okay,
and it's fixed.
Right.
The token for profit is not, that's profit. That's you. That's a one-time token, right?
Okay.
And it's almost like that's even if we were to convert it into USDT.
Okay.
So call it. Say we're going to get charged. I know $5,000 for converting that much, right? As fees. So you'll end up with a deduction of you'd have 120,000 USDT split between however many token holders. I think that's the only way you can do that.
Okay. Sure. So I think what we want is a real estate token design, right? I mean, that will be different from, let's say, the platform or the company's tokenomics. We're talking about the tokenomics for the actual property itself, right? I think this is what you're discussing.
Yeah.
What's the tokenomics for the actual property, right? And
yeah, and
right.
And then are we sharing the money for the how often are we paying that dividend? Because now you're talking about, well, I've got an asset that's worth, it's a bit like buying my Apple shares, right? I've got an Apple share that's worth, I don't know, $300 or whatever it is at the moment, and they pay a dividend every quarter of $25.
Right. Okay.
So this is normal investment stuff, right? And people can sit there and they can make these judgments. But the really cool thing is we've democratized it. Over Josh can get in on the app with $100.
Right. Exactly. My current quick feedback is, I think the major theme of the crypto world is that everything should happen fast. Okay, so for example, like Celsius, when it was paying, actually not just Celsius, I think including like crypto.com, like when they pay dividends, it's usually a weekly dividend that they're paying. Okay, weekly dividends by tokens. So people can see, value being increased on a regular basis. And this also matches the highly liquid, kind of.
Yeah.
So
I wouldn't use Celsius as an example.
Yeah, I mean, also crypto.com. Okay, I mean, all the platforms, I think that have an earned program. Basically you stake some assets and you're earning a dividend interest.
But what are they dealing with? Are they dealing with fixed assets, which are understood?
No.
Or are they dealing with crypto assets?
Crypto assets.
Right.
Yeah.
So crypto assets, being that they're highly volatile and changed at a rapid pace, seconds, means that you can actually manipulate the dividends to be weekly. You got a property where people are paying you a monthly fee for rental. You're not going to be able to pay dividends on a monthly fee.
Okay,
you're going to have to do maybe it on a monthly dividend.
Yeah, maybe a monthly dividend makes more sense. All I'm saying is that monthly would be more aligned with the crypto logic than, let's say, you're paying on a annually or even a quarterly basis. Yeah,
I would say, I don't care about the crypto world concept because, quite frankly, a lot of what they offer is bollocks. So I don't care about that. What I do care about is whether or not it's acceptable for the investor.
Okay.
And I think, whether or not it should be quarterly or monthly, I think monthly, quarterly, I think is acceptable when you're talking about getting a dividend from any form of investment. Monthly is nice.
Okay.
But you see, then now if you say, okay, monthly's fine. So then part of the structure, and this is why it's really important that we get this right, because this is going to have an implication on how
on the operation,
the platform, because of the operational element of it. Because if I sell one of my tokens at 11:59, and I'm getting paid a dividend at 12 o'clock, well, okay, if you pay me a dividend and I don't own the token anymore, that's not my problem. Right. So that immediacy has to be taken. Well, we have to build some kind of factor into the programming, which we will have to be upfront about. You can't trade your token trading will be closed on, I don't know, for the last, I don't know.
Well, it's just like stocks. Stocks, when they pay dividends, there's a lock period, from what I understand, where no stock tradings are allowed, right? I mean, there's usually a few days where until it's.
So we might say that if we pay dividends on the 5th of each month, then no trading of tokens between the 28th till the 4th.
Right.
Or something like that. I'm just making this up as I go along, right? But I mean, it makes sense then. But then that we have to build that into the platform then, don't we? Which is all part of the programming, which is all part of the code, which is all part of the expense of doing it. That's why we need
the design. That's the design. Yes. Yeah.
But now you see, now we're building a company that's actually really profitable.
Yes. Yeah.
And now I'm getting excited because I can sit there and see money coming in.
Yeah, this is real money, real cash, for sure.
And what I want that.
Yeah, so
none of this 25 grand salary.
I think these are the quick numbers Henry provided. Okay, 5% is the rental return. The average capital increase is 10% per year. Okay, so over a 10-year period, that would be 100%. And he also expects a city kind of renovation kind of increase of 100% over a course of 10 years. Okay, so that's another 100% capital appreciation. So that means potentially over a 10-year period, we're talking about 250%, okay, of overall increase. So the average annual return will be 25. So that's kind of his, obviously
Okay.
it's not, right? It's not like equally distributed, right? But on average, right? That's
Got it.
if it's a 250 over 10 year, it's an average 25% per year increase, which is not bad, right? If you're patient enough to sit with your tokens for 10 years, that's not bad, at 25, right? Plus, it becomes more liquid and more affordable, right? So those are all the benefits. So I think the tokenomics, the benefits of being tokenized, being liquid, plus a really solid asset, project to back it up based on really cash earning, real estate property management projects. I think that's a winning combination that investors can understand, right? And then our job is really just to make sure that we explain it clearly so they understand, it's a solid investment opportunity with the added benefit of being, a tokenized mechanism, right? And I guess that's our role.
I would
to bring
say
together
I
the
would
parties, the players, the platform, and to
Yeah.
communicate clearly. Yeah, I think that is
I would
our
say
job.
I would like to see I'd like to see his project proposal in English.
Okay, sure. All
You
right.
can get me a copy of that
Okay.
so that with all the numbers and all the rest of it, that would be really useful.
Okay. Are you talking about a very specific real estate?
Yeah, well,
property?
you've just given me the 2.5 with the 5%. So that's what I want to see. But I mean, he said he's got stuff ready to go. So all right, fine. If he doesn't have a project proposal for that one, does he have a project proposal for one of the others that he would say, well, this one was 4 million, but I would have, the rental yield is 8%. Well, I mean, just work the numbers. So I can have that on a separate piece later. But now we can start shaping what the value is that we're gonna bring to the table. I think then we have to sit there and think it through and go, right, when we go back to the guy, the Domingo, you say to Domingo, right, this is what we want to happen. This is what has to work. And we want it white labeled, so and we'll give you this much. We'll give you, and then he's going to sit there and go, well, I want it in USDT. I don't want to have your tokens. So we'll have to figure out that. And then for Ian, Ian's going to be potentially getting 2% of everything.
Right. Okay. All right.
Which then means if Ian takes 2% of everything, right, as co-founders, right, that means you and I get 98% of everything. Now we're talking about your impact framework, right? So for that perspective, now we've got some numbers to work with, right? So what I'd want to see then is if TAP is turning over, let's say the only thing that TAP gets as liquid capital, right, is the $4,000 it costs to set up a company. So in the first year, the only liquidity we're going to raise is at best 4 fours are 16, right? So that's $16,000.
What's liquid? This? Okay.
Well, if you say you've got 4 properties, 4 projects at 2.5 million, right?
Oh, I see. You're saying that that's the payments, right? Okay, for projects.
Just set them up, right? Now that might actually that I don't know whether or not it will or it won't, but it might be that equates to the fee that we pay Domingo.
Okay.
I don't know. I haven't done the maths for that, but that might be a solution, right? And indeed, that might be the solution. Actually, I just thought of that maybe. To that, we pay. Domingo gets paid from whatever the setting up the setup fee is. But again, we've then got no liquidity until when? Until the actual projects start to trade or release. Okay. And then also we need to factor in let's say that it doesn't go well and Henry wants to pull back the project, and he's got the finance to do it. Can he buy back all his tokens?
Right. Okay.
And I think that's a factor that we need to bring into it as well. Because,
okay.
for instance, if I'm doing a project and I want to raise funds,
right,
and I would want to be able to raise the funds, buy the land, build the property, increase its value. Then once I've increased its value, I get another lender in to lend me enough money to pay off all my initial lending, and let me sit with 100% ownership.
Okay.
That would be how I would normally want to operate.
Okay.
So are we able to factor that into the whole process?
Okay.
You know, and again, that's but you see, anyway, that's something that we need to think about.
Okay.
But yeah.
All right. So you're talking about how the current our framework relate to current modes of operation, right? In terms of how investors work. Yeah. Okay. All right.
Yeah. I think what might be useful here, Shinjun, is I've got to stop because it's 1 o'clock. But if you and I write down summaries of what we believe has been, decided upon, right, or what conclusions we've come to.
Okay.
Because then you and I can sit there and go, well, all right, at least we're coming at it.
Mike,
what I miss, you'll pick up.
Yeah. Okay. I think it's fine for us to keep discussing, but I think I already sent an email. I think you're CC with that to invite Ian to join and for feedback. And I think he wants to see what's called narrative and possibly, investor deck. Okay. So my suggestion is that while we're doing the combination thing, we also produce things for Ian to see. Okay, maybe even in a form that, that would be, visible for him, understandable by him. So, yeah, so, okay, so I wrote down the agreement is get Henry as advisor, and probably we want to do monthly dividends with, no trading lock-in period. That's what I wrote down. And I would suggest as a next step, okay, so get Henry's proposal in English. Okay, that's something I mentioned. Make sure the real estate token has been designed. Okay, so that is something I think I can take an initiative. Okay. And to basically and also do revenue estimation. Okay. That will probably I think what we are all discussing so far, this is all nicely, can be put into a white paper, okay, or some kind of narrative for investor deck. So maybe we can do with a simple slides as an investor deck. What do you think in that format? And because Ian will want
in
to
the same way that we did it for JCF.
Right. I mean, Ian will want to see this anyway. Yeah. So do you think you can maybe do this for the?
I think I mean, that's easy.
Okay.
That's not a problem.
Okay. What about the revenue estimation?
I say
is that something you want to do? Right. Okay.
Yeah, we need to. That's why I wanted confirmation in terms of So I'm sold on this. I've been sold on this as a concept. I now understand how it's mechanically going to operate. But what we've still got a few loose ends here and there that we need to tidy up, but that's okay. We can move forward.
Right.
And I just think we need, I can see them. For instance, how we're going to integrate with Domingo. That's the thing, right?
Right.
Because that's loose ends, but that's okay because I'm sure we can work that out.
Right.
We got a better idea. I'm much more comfortable with the numbers. That's okay.
Okay.
By utilizing Henry's example, I can sit there and go, well, okay. So if each project is 2.5, if each project is going to be this, if each project is going to be that,
there's a bit of
multiply.
there's a bit of a spreadsheet work. I can see that. Is that something you like to do? I mean, in
Yeah, I
terms
mean,
of
that's
your,
easy for me. I don't mind doing that. But I mean, the thing is, I say I don't mind doing it.
is that your unique
You're
ability? Is that something you enjoy?
I can do it without thinking, shouldn't I? So yes, I suppose it is.
Okay.
Having said that, I would say I would probably, if you gave me a choice, I would say it's on my upper side of excellence, right?
Okay. Okay.
Because there's a point at which I love doing it,
Okay.
right?
Okay. All right.
And I can do it effortlessly. And there comes a point at which it becomes boring for me,
Okay. I see.
right?
All right.
So if it's too repetitive and too
I
administrative,
see.
it becomes
Okay.
boring.
Yeah.
If it's
So,
creative, it's a
okay.
unique ability.
All right. Okay. Great. So, do you? I'm just asking. You know, you like to do the first version for that, or
Yeah, sure. But again, I've got to take.
you want me to
I'll
do
take
it?
inspiration.
Yeah.
No, I mean, if you want to do it, if you want to do an iteration, then do it, and then I'll look at it and go, right, okay, fine, this is how I would do it, or something like that. But I mean, the point is, who's going to do it quicker, you or me, to get the first iteration out?
Right.
And let's face it, Shinjin, your 80% is lower than my 80%, right? So
Right. Much lower.
You're better doing first iterations for me to come along and do second iterations.
All right. Let me do the
Yeah.
first iteration then. Okay. Yeah. Okay. And maybe get something up and running quickly. Because I can sense that you want to see real numbers. And I do have some idea about how to come up with those numbers.
You do that then.
So yeah. All right. Okay. All right.
Now that's cool because we're working to each other's strengths now.
Yes, and that's what we should be doing.
And I want to go, right? I do want to go, right?
Okay.
But I have to say what Sarah said.
Right.
Is very important.
Okay, sure.
And at the end of the day, the growth, the positive side of what she said is the growth that you've had over that time period, which is great for you. But that growth for you is no good for other people. In that, Blue Tea hasn't benefited from that growth.
Right, not yet. Okay.
Well, not at all, because he's walked away, right?
Right.
Sonny has walked away, right? So he's not benefiting from it.
True.
Right?
That's true. That's
at the moment, the only time that I'm going to benefit from this is, okay, I could say, I've already benefited because we've had some level of accountability, which we would not have had we not done that. Right. Yes, I've benefited, but I've actually financially suffered because I've spent time working on JCF and not got any recompense for it. I've been to Canada twice now for JCF, not got any recompense for it. So why I'm enthusiastic about TAP is because I need to get some financial recompense for it. So whilst psychologically I might have benefited from it, and whilst I've actually learned a lot, which is a benefit, it's not. There has to be that kind of balance as well, because otherwise it's not paying for the rent. So that's kind of what I mean about whether or not people are benefiting or not from it. So that's why they go. You guys have left you because they're not getting any benefit from it.
Right. True.
And the psychological, I'm a better mindset person, stronger, isn't always enough for some people. Because they can't appreciate what the value of a good, strong mindset is. But anyway. Okay. That's my feedback from those comments, really.
Okay. Right.
If it's of any value.
Right. I think that's very fair. That's very fair. Yeah. So I guess for me it's I want to become profitable. That's the conclusion.
So here's a good point. So here's a good point, right? So on that, with that thought, when you're doing the first iteration of the spreadsheet, put down what the appropriate salary is for the chief visionary officer and for the chief executive officer of TAP will be.
Okay, right.
because that's
Okay.
important.
Right.
Along with what you think the actual estimates will be for the
right.
coding
Whatever
and the blah 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 blah.
etc. Yeah, sure,
Yeah.
sure. All right. Okay. All right. Well, thank
Good.
you. All right.
Cool. Awesome, mate.
All right. Take care. Take care. And by the
Yeah.
way, are we meeting on Thursday? Probably
Thursday.
not, right? Not on Thursday, right?
Thursday's the 14th. Or what time did you want to meet?
That if we were to meet, that will be that will be an hour. What time is it now at your place? It's
Right now, it's just gone 1 o'clock, 1:15.
1. Okay, so that will have to be 12. 12 for you. Yeah.
12. I can do that if you want to.
Let's do a quick sync then. All right. Okay, maybe half an hour. Okay.
Okay.
Half an hour. All right. Okay. All right. So take care. Yeah. So have
cheers,
a
buddy.
fantastic week. All right.
And
All
you,
right.
my friend.
All
Have
right.
fun.
Take care.
Bye-bye.
Great lunch. Bye bye.
Bye.
Bye bye.